On behalf of 4S Services, I welcome all participants to the Q4 and FY18 conference call of Meghmani Organics Limited. Today on the conference call, we have Mr. Ankit Patel, CEO, Meghmani Organics Limited, Mr. Darshan Patel, COO, Pigments, Mr. Sopakar, MD, Meghmani Finchem Limited, and Mr. Gurjant Singh Chahal, CFO, Meghmani Organics Limited. We will now have Ankit give his opening remarks. Over to you, Ankit.
Thank you, Nitesh. Good evening, everyone, and a very warm welcome to the Meghmani Q4 FY18 investor call. FY18 has been another successful chapter in Meghmani's growth story, in which we delivered strong revenue growth and doubled our profit, reporting highest ever PAT margin of 9.7%. During the year, we achieved increased utilization across all the segments, increased contribution of value-added products, and effectively lowered the interest obligation by 22% on account of rupees 75 crore reduced debt. We also expanded our global footprint and now export to more than 75 countries and providing service to over 400 marquee clients. Coming to our financial performance for the year, our consolidated net sales for the year FY18 grew by 27% to reach rupees 1,774 crore as compared to rupees 1,396 crore last year, on the back of strong performance in export as well as in domestic market. Export saw 29% growth while domestic market increased by 25%. EBITDA for the period increased 49% to rupees 431 crore, resulting in 360 basis point expansion in EBITDA margin to 24.3%, driven by improvement in raw material cost. PAT for the year almost doubled to reach rupees 171 crore as compared to rupees 87 crore last year, with PAT margin reaching 9.7%. The consolidated revenue for Q4 FY18 grew by 35% to rupees 344 crore in Q4 2017 to reach 463 crore, driven by strong growth of 53% in domestic market. Domestic market contributed 51% to revenue. EBITDA for the period increased 63% year-on-year to rupees 120 crore, while EBITDA margin expanded 450 basis points to reach 25.9% on account of decline in raw material cost as percentage of sales from 56% to 46%. PAT increased 112% year-on-year to rupees 50.2 crore with PAT margin of 10.8% as compared to 6.9% in Q4 FY17. Interest outflow declined 12% to rupees 9.2 crore compared to rupees 10.5 crore in Q4 FY17 on account of reduced debt. Looking at each segment's performance in detail, the pigment net sale for the year was up by 12% to reach at 574 crore, driven by a robust growth of 29% in export, contributing to 79% of pigment's FY18 revenue. Whereas net sales in domestic markets was down. Volumes grew by 11% at 16,090 metric ton, while blended realization remained flat. EBITDA was slightly down at rupees 84.7 crore for the year as higher input costs could not be passed on to the customers fully. Still, the EBITDA margin stood at healthy 15%. Utilization level have increased to 81% as compared to 65% last year, driven by 29% growth in production. Our pigment business remained flat for the quarter. Export revenue was up by 6% and contributed to 81% of Q4 FY18 pigments revenue. EBITDA was down at rupees 21.7 crore for the quarter and EBITDA margins stood at 15%. Utilization level have increased to 91% compared to 74% in Q4 FY17, while production grew by 26%. Net sales for the year in agrochemicals grew by 33% to reach at 627 crore, driven by strong growth of 43% in exports and 15% in domestic market. Export contribution up at 67% from 62% in FY17, while domestic contributed at 33%. Volume were up by 11% at 17,342 metric ton, coupled with strong growth of 19% in blended realization. EBITDA grew by 114%, driven by positive market condition and better price realization to reach at 98.1 crore. EBITDA margin also increased, reaching 16% as compared to 10% last year. Utilization level up from 60% to 68%, while production grew by 14%. Our agrochemicals net sale for the quarter registered strong growth of 32% to reach at 129 crore, driven by robust growth of 54% in export, which contributed 79% to revenue. Volume witnessed 12% growth to reach at 3,181 metric ton, while realization were up by 18%. EBITDA was down at rupees 7.6 crore and EBITDA margin stood at 6%. Utilization level has increased to 57% from 53% last year and production was higher by 9%. Our basic chemical sales for the year grew by 52% to reach at 597.1 crore on the back of strong growth in both domestic and exports market. Volumes were up 11% year-on-year, while realization were up 34% for FY18. EBITDA for the period grew by 78% to rupees 255 crore and EBITDA margin were up to 43% on account of better price realization. Utilization level have increased to 86% from 77% last year and production grew by 12%. For the quarter, our basic chemical registered robust growth of 102% in revenues to reach rupees 199 crore, driven by 116% growth in domestic market. Volume sales were up by 15%, reaching 41,144 metric ton and realization were up by 76%. EBITDA up 3 times to reach at 93.6 crore with a margin at 47% as compared to 32% in Q4 FY17. Utilization improved to 90% in Q4 FY18 with 13% growth in production. Progress on CAPEX FY19 outlook. As we continue to deliver growing profit and with comfortable leverage position, our board has recommended a dividend of 40% to reward our shareholders for their support. This is subject to shareholders' approval at AGM. Going forward, we expect all our business to maintain this strong and profitable growth in both domestic and export market. The economic boost to farmers in the recent budget and another good monsoon predicted for this year would act as a strong tailwind for the domestic industry in 2018. So with this, I come to end of my opening comments and I would now like to open the floor for questions. Thank you.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Thank you. The first question is from the line of Agastya Dave from CEO Capital. Please go ahead.
Thank you for the opportunity. Great numbers. Sir, you mentioned something about CapEx, but I didn't catch any of the numbers. So the CapEx that you guys have announced, can you give some updates on that, especially the CMS project? First thing shaping up, I believe the commissioning was in March 18. Has that happened?
I'm sorry, can you just repeat your question because the voice is not clear?
I'm sorry, is it clear now? Better?
It's better now.
Okay, so any updates on your CapEx, especially the CMS project? I believe the commissioning was in March 18. Has that happened? And the other CapEx, if you can just, all the three projects, if you can just tell us what the progress is.
So commissioning of CMS is planned in early part of Q3, and the project work is in the full swing right now. And the total CapEx has been planned approximately 140 crore for CMS project.
Correct.
Yes. Another project which we already announced, that is hydrogen peroxide and caustic soda expansion. And both the projects will come online in Q1 of next financial year.
Okay. But the CMS project is already online?
No. Commissioning will happen in the Q3 of this financial year.
Okay, I have that wrong. Okay. Thank you. And in your last annual report, you had mentioned that the channel inventory in agrochemicals was very high. What's the state now compared to last year?
Thank you, Mr. Dave. That was related to the brand business in the Indian market. Now as we are seeing, the situation is getting very tight nowadays as far as the chemical industry is concerned in China, and imports are getting restricted by the government through Make in India policy. So now the channel inventory in the domestic market has gone down, and with the strong expected monsoon, we feel that there will be a very good demand in the Indian market. And what we are focusing on the domestic market, we will be able to achieve that growth.
Okay. A final question. On the basic chemical side, you have for a very long time, for at least 3-4 years that I've been tracking you, you have maintained that the sustainable margins are in the 30s. Now we have reported for the entire year, I believe, close to 43%, if I'm not mistaken. And the prices have shot up. So do you think, I'm pretty sure sooner or later prices will come down. What's your outlook on that side?
See, last year was an exceptional year for the global, not only India but globally for the chloralkali industry. But we still maintain that for this year, the EBITDA margin should be between 35 to 40%.
Okay. At the EBITDA level?
At the EBITDA level, yes.
Okay. And any guidance on revenue growth in basic chemicals?
We anticipate this year should be around 20% growth.
Okay. This is value or volume?
I'm sorry?
This is value or volume?
No, the volume will remain the same. Obviously, the additional production of CMS will add it up. But because of the better realization, we anticipate the growth of 20%.
Okay. Sir, thank you very much. And also, before leaving, my regards to Mr. Shah for his health. Met him once, and I hope he makes a fast recovery, and it's nothing serious. Thank you very much, sir.
Thank you.
Thank you. The next question is from the line of Surya Patra from Phillip Capital. Please go ahead.
Yeah, congratulations for the good set of numbers, and also for the great deal that you have signed with IFC.
Thank you.
Yeah, so first of all, just in the previous question that you mentioned, sir, for the CMS project, you said first phase of that will be commissioned in the first quarter. So just wanted to check whether this is in the 2 phases that is coming up.
No. CMS project has only 1 phase. There is no 2 phase there. And the project is going to commission the first half of Q3. Early part of Q3.
Okay.
Yeah.
Okay. And, sir, relating to the same, so now subsequently, so this with the CMS project, will a portion of the chlorine that is generated currently will be utilized, and subsequently still we will have some chlorine to handle. And further, when the expansion of caustic soda will happen, so again we will generate more chlorine. So ultimately, whether the kind of a dent what we are getting because of the chlorine handling currently, so again, whether the similar kind of situation will remain even after the CMS project, with the expansion of caustic soda happening in the following year?
Well, I'll be happy to tell you that, especially at least up till now in this financial year, chlorine prices are in the positive direction.
Okay. Oh.
So, whether dent will be there or not, it's very difficult to say right now.
Okay.
But overall, we are seeing positive demand in the chlorine consumption industry.
Okay.
Yeah.
And may I know, sir, if last year it was around near about 35 to 40 crore in that range, there was a kind of a dent because of the chlorine.
Yes.
This year, financial year, whether you have earned money or there was some charges that you bear because of the chlorine?
No, so throughout the year, practically, yes, we had to pay to lift the chlorine, so charges were there. But from March onwards, we are seeing a positive. So even Q1 of this financial, you will see the positive in chlorine pricing.
Okay. Is it possible to share the numbers, sir, for last year in the sense FY18? What was the charge that you have?
It was roughly 45 to 46 crore.
Okay.
Yeah.
Okay. So that means that amount remained almost same compared to that of the previous year.
Yes, because it recovered eventually in the Q4. That's the reason.
Okay. Okay. And now on the on the deal that you have signed, ISC. So after that, what is the current gross block that? After the deal, what is the current gross block that you are having, and if you can share the split of that in terms of the working capital and the term loan, that would be better, sir.
Mr. Surya, you mean to say as a company as a whole?
Correct.
You want to understand the financial position, what is the short-term and long-term position?
Yeah. And if you can tell briefly how have you funded that, the payment to the IFC?
Okay. IFC actually, we have already published that 221 crore has been paid to IFC.
Yes.
And 4.17 times return.
Correct.
And this has been funded mainly from the internal accruals.
Okay.
Yes. And small portion from the short term, because we were having a healthy cash position this year. Actually short-term funding, so partly it has been used that way.
Okay, so currently what is the after
this is the operator, Mr. Patra, may we request you to rejoin the queue for follow-up questions?
Fine, so I'm just completing my question that okay, what is the current short-term and long-term debt position at this moment after the deal?
After the deal, around 270 crore is our long-term. And around 220 is short term.
Okay. Thank you, sir. Wish you all the best.
Thank you.
Thank you. In order to ensure that the management is able to address questions from all the participants, we request the participants to please limit their questions up to 2. Should you have a follow-up question, we request you to rejoin the queue. The next question is from the line of Pavan Kumar, an individual investor. Please go ahead.
Hello. First of all, I would like to congratulate for the fantastic numbers in terms of QOQ and YOY.
Thank you very much.
Yeah, my question is, since we are seeing upcoming projects, one is the commissioning of CMS project, which will be in Q3, will be active, I think, as you said, and the other one is hydrogen peroxide and caustic soda projects, which are coming in Q1 2019-20, I believe. Correct?
Yes.
My question is, how much revenue do you see coming from these two major projects in terms of numbers? Will be adding.
Based on the current pricing and all three projects put together will add roughly top line of 550 crores to 600 crores.
Okay. Thank you. And the other question is, since I am seeing pretty much the debt level is under control and company is generating a lot of revenue and profits, so do you have any buyback plans of the shares in future? Just for the sake of knowledge?
We have not decided so far, but because, we are continuously growing with the organic growth, putting up new projects. So as of now, we have not decided to do any kind of buyback.
Okay, all right. And one other small question only. Apart from the projects which we have discussed, do you have any other capex plan in pipeline 2018-19 or 19-20 till that time?
Yes, the project what we have announced, that is mainly from the basic chemical division, while other two division, which is agrochemical division and the pigment division, we are working on some new projects, and there will be capex involved, which will be announcing with the proper project in coming days' time. But we feel that the capex will start probably at the Q4 of this financial year or Q1 of the next financial year.
And how much capex we expect to be used there?
Depending on the project size, we feel that it would be in the agrochemical division can be anywhere between 100 to 150 crore in the first phase. And for the pigment, we are still working on it, so we don't have the number right now with us.
Okay. All right. Thank you very much.
Thank you.
Thank you. The next question is from the line of Monanita Mitra from Stewart & Marketers. Please go ahead.
Hello.
Yes.
Thank you for giving me the opportunity and congratulations on the good set of numbers.
Thank you.
I have some questions as in can you tell me about the total volume growth in each segment and the guidance for the next 2 years?
I'm sorry, your voice is not clear. Can you repeat your question?
I would like to know about the volume growth in each of your segments, the pigments, agrochemical and basic chemical segment, and the guidance for the next 2 to 3 years.
Sure. As far as all the three segment volume growth is concerned, as we have already mentioned, in the pigment division, there is approximately volume growth of 11%. In agrochemical also, there is a volume growth of about 11%, whereas in basic chemical division, there is a volume growth of about 14%. And looking at the future in mind, as far as the basic chemical division is concerned, the project what we are putting up now, that will help us to have a volume growth as well as top line growth. And in agrochemical division, we have reached the capacity utilization of about 68% this year, and there is still room for further utilization of the existing plant. So our target is to utilize the plant to the nearly 85% level.
Okay.
And with that, we will be able to grow further. At the same time, in the agrochemical division, we are planning to grow into our brand business, where not much capex is required, where with a small capex, we can do much faster expansion because of formulation business. And in the pigment division, we have reached a sizable level as far as the capacity utilization is concerned. We have reached up to 80% level. And we feel that, there is still small scope available. By doing some small debottleneck changes, we can further expand to nearly 15%. After that, we will not be expanding in pigment division for the same product range. Then we'll be entering into some different kind of product range or some new project.
Okay. So the market share for pigments is 8% now. So if you get into some other segments in pigments, then what will be the market share in the next 2 to 3 years?
So market share in the pigment, we are mainly into copper phthalocyanine based pigment, which is pigment blue and pigment green. For that, we are having about 8 to 9% market share globally.
Yes.
So, if we, by any chance, if we enter into other pigment, then it it will be a different market, I would say. It is considered as a different pigment basket. So that we need to evaluate. From that, we need to start as a scratch level, I would say. But we have a market with the existing customer base, so we can grow very fast because we have a ready network available with us.
Okay. And as far as the agrochemicals is concerned, you are saying that you are vertically integrated. So you also produce technicals along with formulations. So in the next few years, you are trying to concentrate on the formulation business. So since you also produce technicals, so due to the rising raw material prices in China, so the impact must be less in your case. So is it true?
That is correct. We are totally vertically integrated. We have our own intermediates. We have our own technicals. We are doing formulation. So we have got very strong base available with us. So with the current China market situation, we feel that, with our strong manufacturing base, we would be able to grow much faster in this kind of situation. And we are getting a lot of opportunities as far as market is concerned. And yes, definitely the growth our favor would be more to grow into the formulation business because that is more of a value addition business. So at the end, whether it's a domestic market or an export market, our focus is always on the formulation business.
Okay. So what was the impact of rising raw material prices? So you were vertically integrated, but whole of the raw materials you manufacture yourself, or is it that some part of it you import from outside?
It is very difficult to, still in India, we don't have many of the raw material available with us. So we have to be dependent on certain raw material point of view on Chinese market or any other market.
Okay. So what percentage you import?
That is still not very big as a company, as a Meghmani. It is a very minor percentage with us. So that is not going to impact us a lot as far as the input from Chinese market is concerned.
Okay. And what are the blended realizations?
Monika Mitra, may be requested to rejoin the queue, please, for follow-ups.
Okay.
Thank you. Thank you. The next question is from the line of Jayesh Parekh from JMP Capital. Please go ahead.
Congratulations to entire team for excellent set of numbers.
Thank you, Jayesh Bhai.
Yes, Ankit Bhai. My only small clarification I need, Q4 agrochemical segment EBIT is compared to Q3 and compared to same quarter last year, seems to be on a lower side. Can you clarify on this?
Yeah, sure, Jayesh Bhai. Jayesh Bhai, as you know that nowadays accounting policies are getting very strict, and as an agrochemical division, normally there is a long-term payments are there. So sometimes, when we are expanding in the domestic business, there is a long payment terms getting involved, and we need to make some provisions in our numbers. So part of that is because of the provision in terms of the bad debt.
Yes. Okay. Fine. Otherwise everything excellent. Very excellent year, and once again, congratulations to entire team.
Thank you very much.
Mr. Jayesh, one more point to add to this, as per India's accounting, so in case of our exports, so in CIF basis, so whatever export dispatches are done in the last month, so those sales has to be recognized once it is accepted by and acknowledged by the customer.
Oh, okay.
To that extent, actually, there is a sales adjustment provision is done in the quarter end.
Yes.
So it is relatively high in both cases, actually, even in pigment also, in the month of March, whatever dispatches you do, so it does not reflect into the sales.
Okay, so that way, so it will have positive impact on Q1 current financial year.
That's right.
That's correct.
Thank you so much. Thank you.
Thank you, Jayesh Bhai.
Thank you. The next question is from the line of A.M. Lodha from Sanmati Consultant. Please go ahead.
Hello.
Hello.
Ankit Bhai, good afternoon. I am calling from Calcutta.
Good afternoon, sir.
How are you?
Good, sir.
Okay. Congratulations for the good set of numbers to you, to Saporkar Saab, then your younger son, everyone, Darshan Bhai, for the excellent set of numbers given by the company in this quarter. We are very happy. There are 2-3 queries which I would like to clarify.
Sure, sir. Thank you.
Number one, Ankit Bhai, as mentioned by Jayesh Bhai, that this margins, this agrochemical margin quarter on quarter was down from 10% to 6%, is mentioned in your slide also.
Yes.
Similarly, pigment margins is also down from 17 to 15%.
Yes.
So the things which these accounting norms, which newly accounting standard norms.
Yes.
That is the reason of that only, or anything else reason might be there. In both divisions, your margins are down in this quarter on quarter. Only savings, your basic chemical has saved you, where the margins have gone from 32% to 47%.
That's correct. As I mentioned, for the agrochemical division, I have already given the reason. And as far as the pigment division is concerned, sir, yes, there is an increase in the input cost, which is our major raw material cost for the pigment division is phthalic anhydride, copper, sulfuric acid, urea. So these are some of the major raw materials for the pigment division. And majority of the raw materials, you must be knowing that, there is a sudden increase in the copper price, into phthalic anhydride prices, and sulfuric acid price. So these factors, the prices have increased suddenly very fast, and we were not able to immediately pass on the same price increase to all our customers. But we feel that in this year, in the first quarter, second quarter onwards, we'll be able to pass on this cost increase to our customers. So whatever decline in the margin, we should be able to manage in the coming financial year.
Okay.
For agrochemical division as well as for the pigment division.
Both divisions. How basic chemical is doing, sir? Because you have recorded is 47% margin.
Yes.
And it was a 32% quarter on quarter.
Yes.
So, the second question is, sir, regarding Meghmani Fine Chemical Holding. You have paid 221 crore to IFC for acquiring the Meghmani Fine Chemical Holdings through one of your subsidiary.
Yes.
Am I right, sir?
Yes.
Existing, how much holding is there in Meghmani Organics, sir? How much holding of Meghmani Fine Chemical Meghmani is holding?
We have acquired IFC stake through our subsidiary.
That's different. But existing holding is how much, sir?
The total is 77%. It is 76.7%.
Approximately 77%. Rest 23 is being held by family members individually or their companies.
Yeah.
Remaining 23% holding is with the management also. Promoters also.
Yes.
So, sir, one thing...
excuse me, this is the operator. Mr. Loda may be requested to rejoin the queue for follow-up questions, please.
Thanks a lot. Thanks a lot.
The next question is from the line of Pranav Machala from Reliance General Insurance. Please go ahead.
Hello.
Yes.
Sir, congrats on excellent set of numbers. Sir, I had a question. Particularly in basic chemicals, we've seen the EBIT margin expanding to 47% this quarter. Sir, how sustainable is this?
This is, last quarter was very unique, and globally the demand was very high. That's the reason we have achieved this higher EBITDA number. But we don't foresee that it will remain last throughout this financial year. So our prediction is that it will remain between 35 to 40%.
Okay. And sir, in case of the money which has been paid to IFC, could you, sir, give out the breakup of how much was it via internal accruals and how much was via debt funding?
Actually, if you see on the standalone basis, around 171 crore is the EBITDA which we have generated in standalone.
Okay.
Okay, and this is mainly accrual. There is no much capex has come up as far as standalone MOL is concerned. So it is mainly from the internal accruals. So there is no specific term loan or etc. has been taken for IFCs yet.
Okay, okay. And sir, in case of pigments, can we assume that going forward 15% would be there? It will be difficult to achieve anything more than that, or we think that price hikes would be possible?
In fact, Mr. Pranav, by 15%, we feel that, last year in the pigment division, this is pretty low number because with the increase in the raw material prices, it should have increased the margin and everything, but which was very difficult last year. But this year, it has started with a positive note. Now the market is moving into a positive direction. And we feel that, we will be able to pass on this cost increase to our customer.
Okay.
So for the whole year, we hope that it should increase from 15%. And it should be anywhere between 15 to 17%. It should be there. We hope to increase as much as possible.
Sir, thank you. Sir, one last question. Sir, what would be the impact of, if any, phosphoric prices, particularly in the agrochem EBITDA margins? Is there any contribution from those?
Phosphorus is a very basic raw material which is available plenty in China, and there are a lot of raw materials or intermediates based out of phosphorus. So yes, there is an increase into certain intermediates and raw material prices which are coming out of China. But as of now, in our agrochemical division, we are able to pass on the same benefit to the customer. Same factor, China, because the availability from Chinese market is very much limited. So there is I would say demand is there and supply is limited. So with the increase in cost, we are able to pass on the same cost increase to our customer because of the situation.
Okay, okay. So, sir, on a full year basis, is it safe to assume double-digit margins in agrochem?
Definitely, yes.
Okay. Thank you, sir.
Thank you.
Thank you. The next question is from the line of Bhavesh Jain from Envision Capital. Please go ahead.
Sir, it is possible to share the EBITDA margins on the CMS and this hydrogen peroxide on steady state basis. What kind of EBITDA margins we can make in these two projects?
With current pricing, we feel that EBITDA margin should be in the range of 20 to 22%.
Okay. And so what will be the capex outflow for this FY19, considering all these three major projects are there?
Total capex we have planned is is 650 crores.
Okay, so everything will be this year only, FY19?
No. Some will happen in this year and remaining will happen in the following financial year.
Okay. And so, if I've heard rightly, you said in agrochem we are planning 85% capacity utilization for FY19.
See, this pigment and agrochemical typically is a batch operation plant. These are not a continuous plant. So typically when you reach 80% or 85%, that is a very good achievement. So in any batch mode operation industry, 85% is a target number. So this year we have reached up to 68% and our target is to reach at 85% in this financial year only. Now, let's see where we reach because these are all batch operations.
Sir, if I consider that, then the volume growth will be 33%.
Yes,
for
that's
FY19.
That's
so
correct.
What will drive that? Whether we are expanding our distribution network or we are this branded formulation, that will drive the growth. What will drive this 33% volume growth?
See, that is on the continuous basis to reach up to 85%. So we may not be able to achieve in just 1 year time. Okay. But that is what the overall target is. And as far as the sales point of view is concerned, one of the major factors is China, which is going to remain. We feel that the Chinese situation is going to remain very tight for next couple of years, at least for next 2 to 3 years time. That is one of the factors. At the same time, we are getting our product approval registration in different markets, which will also help to increase our production.
Okay. And the final question, what will be our maintenance capex every year?
Maintenance capex, it's to the tune of about 30 crore, not much. It's a routine maintenance capex.
Right, across all three divisions.
Mainly agro and pigment. As far as the basic chemical division is concerned, our maintenance is approximately about 20-25 crore.
Okay, sir. Thanks a lot and all the best for the future.
Thank you very much.
Thank you. The next question is a follow-up from the line of A.M. Lodha from Sanmati Consultant. Please go ahead.
Ankit bhai.
Yes, sir.
Just a very vital and important question from the point of view of minority shareholders.
Okay.
Ankit bhai, I looked at your figures of the last 3 years. In 2016, the company, I am talking now standalone, because dividend is being paid out of the standalone profits only.
Yes.
Dividend is being distributed out of standalone profits only. Therefore, I have just compiled the last 3 years figures. In FY16, the company made EBITDA of 131 crore. In FY17, the company made EBITDA of 140 crore. And this year, the company made EBITDA of 200 crore.
Yes.
Whereas dividend paid to shareholders was 30% in 16 and 40% in 17 and proposed 40% in 18 also. So just EBITDA has increased from 100 surplus to 200 crore. Dividend has not increased in the same direction, number one. Number two, Ankit bhai, just I was wondering, major expansion of 641 billion is being done in Meghmani Fine Chemicals.
Yes.
That major expansion at the cost of the Meghmani Organics Limited, because the Meghmani Organics is holding the more than 55% of the capital.
Okay.
Further, you have added 25% from IFCI by virtue of acquiring that 25% in agrochemicals stake.
Okay.
In Meghmani Agrochemical, one of your subsidiary of Meghmani Organics Limited.
Yes, sir.
So, major expansion is being done in that company at the cost of the funds available, loans taken and generated by the company Meghmani Organics Limited. Actually, Ankit bhai, my idea is to request all of young generation as well, you can request to the board.
Okay.
Because earlier the IFC was holding 25% equity, so it was not possible, may not have been possible to merge the Meghmani Fine Chemical into the Meghmani Organics Limited.
Okay.
Now Meghmani Organics is holding 77% and the rest of the holding held by the promoters in individual capacity or company personal capacity.
Yes,
so
sir.
total holding is with Meghmani Fine Chemical is with us now.
Yes, sir.
So I think to achieve your vision target of 1,000 crore in each division,
yes, sir,
total 3,000 crore vision of the company, that is only possible if you merge that company into Meghmani Organics Limited. That will serve you two purposes, Ankit bhai. One, management will be able to increase the holding in Meghmani Organics Limited. Number two, that there will be Meghmani Fine Chemicals, which is a subsidiary, that will be accounts of that will be merged into the Meghmani Organics Limited. That way you need not to prepare subsidiary and the other one. Number three, so far we minority shareholders are concerned. We will be benefited.
Mr. Lodha, may we request you please limit your
one question. This is only one question, ma'am. This is one and last question. I will not ask you further question. So, in my view, minority shareholder interest will value unlock can be there if you merge that company into the Meghmani Organics Limited.
Thank you very much.
This is our request, and because you all are the young and working under the able guidance of Jayanti Bhai, so this is my request to point out the Jayanti Bhai to all of you that this management can consider at appropriate time when they deem is proper and appropriate.
Thank you very much.
That's my humble submission. And dividend, I am not very happy with the dividend distributed by the company. At least you are earning 400 crore rupees in a year, sir, and you are distributing only 10 crore in a year on 25 crore capital, 40% dividend. It's miserable and it's a penny, sir.
Excuse me, Mr. Lodha, may we request you please limit your questions up to one, please?
Okay.
Thank you, Mr. Lodha. I will consider your request and we will discuss internally into management about the company structure and the dividend policy. Thank you very much. I will pass on your message and we'll discuss internally.
Thank you. The next question is from the line of Rohit Nagaraj from Sunidhi Securities. Please go ahead.
Congrats, sir, and thanks for taking my question. I have a couple of questions. One is regarding the capex. You just mentioned that the total capex for 2 years is 650 crores, out of which I suppose 140 crores on the CMS will be capitalized in FY19 itself. Is there any additional capitalization which will happen beyond this?
No.
There will be only one project capitalization. It will be 140 crore CMS project capitalization in this financial year.
Right, and plus there will be some maintenance capex of around 30 odd crores that you mentioned, right?
Yeah, that would be a small routine maintenance would be there.
Right, and so in terms of volume growth, you had already mentioned that in all the 3 segments you had a volume growth of 11 to 14%. Can we foresee similar kind of volume growth in FY19 for the 3 divisions?
For the agrochemical division, yes, definitely there will be a volume growth in FY18-19. For the basic chemical division, because of the expansion into a CMS project and better capacity utilization of caustic potash project, there will be a volume growth, but there will not be much volume growth from the existing caustic chlorine plants.
Okay.
And as far as the pigment business is concerned, we have reached up to 80% level. So there will be minor growth in terms of volume. We are doing some small changes into plant to have a better volume growth. But we feel the major growth would be coming from the better realization point of view only in terms of sales into pigment division.
All right. So one last question, if I can squeeze in. You said we'll be putting up chloromethane capacity of 40,000 tons. So how much of chlorine of the total amount which is produced from the caustic division would be utilized for the chloromethanes?
See, we are producing roughly 380 tons of chlorine per day. Out of that, 140 tons of chlorine will be consumed in CMS.
All right. Fair enough, sir. Thank you very much.
Thank you. The next question is from the line of Surya Patra from Phillip Capital. Please go ahead.
Yeah. So what is the differential realization for the caustic soda in the export market and the domestic market for you, sir? And your outlook, even the revenue mix in terms of export and domestic, what will that be for FY19?
See, whatever we have exported, it is at the same realization what we get at domestic market or probably more than that. We are not export anything at a lesser than the domestic market. So
correct, obviously.
Yes.
Any meaningful difference in the both the realization?
No.
Okay. So is there any need to export caustic soda?
No. See, we are driven by the realizations. If we are fetching a better realization, then and only then we export. Otherwise, India has a very strong domestic market.
Exactly.
And the domestic market is buying at a current price level.
Okay. So there is no specific plan that says that, okay, what is the means of raising export revenue in the caustic soda operation, right? Okay. And regards the pigments, since we have almost utilizing optimally the plants, so you have indicated that there is a plan of debottlenecking and all that. But do you have any plan of adding any new product area or any value-added product stream to the pigment segment going ahead or in near future?
Yes, Mr. Surya, as a company, we are working on a new project, and as a company, we have already identified the project and working on it. But as far as announcement is concerned, we are waiting for the environment clearance. Once we'll have an environment clearance, we will be announcing the project for the pigment division. But there will not be further capacity expansion in the same product range, but because we feel that, for the same product range, we have got about 8 to 9% global market share, and that is more than sufficient. So we would be doing in some other product range.
So these are like downstream products to some extent.
We will be announcing in coming days.
Okay, fine. Thank you, sir.
Thank you.
Thank you. The next question is from the line of Sharan Parekh from JMP Capital. Please go ahead.
Yeah, many congratulations, Ankit Bhai and entire Meghmani team for a fantastic set of numbers. Most of my questions have been answered, but I would just like to ask one question, which is on the CMS project, which is, due to be commissioned in mid of Q3 FY19. So, initially, what would be the capacity utilization, sir?
Initially, it will start in the Q3. It will have a very lesser capacity utilization, but we believe that from the Q4, we'll be achieving capacity of between 60 to 74%.
Right, sir. Right. And also on the hydrogen peroxide and caustic soda projects, I believe that, maybe, we would commission or at least begin the projects in Q4 FY19 or Q1 FY20. So what would be the gestation period for these projects, just to confirm?
No, they will be commissioned in the Q1 of next financial year.
Okay.
So what would you like to know?
So I would just like to know that, how long would it take for the production to start after once what is the gestation period for the project? Installation period?
We don't foresee any problem in caustic plant because this is the expansion and we are already in the industry for last 10 years. But usually caustic may take 7 to 15 days, while hydrogen peroxide may take a month to achieve the full-fledged capacity.
Okay. Yeah, fine. Thank you very much, sir, and wishing you all the best.
Thank you.
Thank you.
Thank you. The next question is from the line of August Dave from CAO Capital. Please go ahead.
Yeah, thanks for the opportunity for the follow-up. Sir, just roughly doing some math, and if I exclude the caustic potash volume ramp-up, and then if I look at your basic chemicals business, you're saying that volume growth will be tepid, and yet, if I heard you right, revenue growth will be 20%. And you're still guiding for those old historical EBITDA numbers. So something is not gelling here. I guess my question is that if I just look at the EBIT numbers, the absolute numbers, will they be same next year? At least same. Is that the worst case scenario we're looking at?
See, usually the EBITDA number, we believe that should be between 30 to 35%. Still, we believe that it will be on the higher side in this financial year because the realization is better. But why it is not matching maybe as per your expectation? Because the coal, which is a major raw material, and the potassium chloride, KCl, which is a raw material for KOIs, the prices has gone up significantly up. So that will dent some extent our margin. But as the realization is better, we are able to absorb it.
Okay. But my question was slightly different. I get this point. My question was that if I just look at EBITDA numbers, absolute numbers, will we see a decline there? Because if this goes up by 20% and the margins fall from mid-40% to early 30s, my guess is that there will be a substantial, will the EBITDA numbers degrow next year?
In terms of percentage you are talking, or in terms of absolute value?
Absolute number. So if they,
in terms of absolute number, yes, there will be a growth in EBITDA because, at the same time we'll be able to, there will be a growth in terms of volume as well because of the new CMS project and better capacity utilization for the KOH, caustic potash. And we would
CMS will be minor, right? Because it will be barely one quarter.
It will be mainly into third and fourth quarter. But yes, that will definitely help because even in today's CMS situation, the prices are much better. And
though we are expecting 35 to 40% margin, even the Q1 is very much on positive side. So this is very much cyclic industry. So you cannot predict the price. Nobody expected, the margin will go up to 47%. But yes, as a company, we will always try to have a better price realization.
It's very difficult to nail down the exact number. That's why we give in percentage.
Yeah, I'm finding it difficult to really analyze. That's why I'm asking. And a final question from my side. On the agrochemical side, can you tell me formulation versus technical?
Yes.
How is the capacity balanced? I mean, utilizations are low at 68% today. But do you have some excess technical capacity which you can sell, or is it properly balanced, or you don't want to do it on principle because you want to, as you are saying, you are backward integrated, but the focus is on formulations? Thank you.
That's correct. As far as the capacity for the agrochemical division is concerned, for the formulation, it is very easy to do the capacity expansion because it's a relatively easy area. The major area is for the technical and the intermediate area. We still have some gap available for the growth into technical and intermediate area. Intermediate, we consume 100% by ourselves for the technical production. So there is still scope for the expansion into technical area. And formulation, it is very easy to expand the capacity.
So the 68% utilization is basically on technicals, right?
It is on both technical and formulation. Okay. So if you want to know on the technical area, then I would say it is in the range of about 65 to 67%. And I think more or less same. Both area is more or less same.
Okay. Thank you. Thank you very much. Good luck. Thank you.
Thank you. Thank you. The next question is from the line of Manoj Jacob, an individual investor. Please go ahead.
Hello. I'm an investor from Cochin. So the non-controlling interest, for this quarter was 26.78 crores. Does this include the FCI share also?
Yes.
It includes?
It includes because it is on 31st March 18 and IFC exit on 26th April.
Okay, so the question is very simple. So from next year, we won't have this non-controlling interest income.
Yeah, IFC will not be there now.
IFC will. So it will be all attributed to the total comprehensive income to the owners of the company. Am I right?
Yeah, as per accounting treatment, so number may change.
Okay, thank you, sir. Thank you very much, and congratulations. Thank you.
Thank you. Thank you.
Thank you. The next question is from the line of Devesh Bakaria, an individual investor. Please go ahead.
Congratulations on the good numbers.
Thank you very much.
The employee cost from Q3, it was 20.86 crore on a consolidated basis. It has gone up to 40.70 crore. So can you just explain why the employee cost has doubled from the last Q3?
One of the factors, as we are expanding into the agrochemical branding business, this business needs a lot of manpower. It is all about team, supply chain, marketing, sales team. So, which gives you result after 2 years or 3 years time. So, but we need to have the infrastructure in the beginning. So we created this team, very strong team. One of the factors is that. And the second is, when we are putting up such a big capex, for all this capex, we put up a team from the very beginning. We try to create the operational team, project team at the same time, to have when these are all automated plants, so we need to be ready with our marketing and sales team as well. So all this increase in the numbers, these are resulting into increase into the employee cost.
Okay. And one more point to add on this is because we have to make actuarial valuation on the retirement benefits of the employees.
Okay. Okay.
So that is also one aspect where you have to live encashment and all other factors. You have to do actuarial valuation that's slightly higher in this year.
So that actuarial valuation is generally in the fourth quarter, if I'm...
Yeah, at the year end, so...
Right. Okay, thank you.
Thank you very much.
Thank you. The next question is a follow-up from the line of Mononita Mitra from Stewart and Mackertich. Please go ahead.
Thank you for giving the opportunity. I would like to know about the blended realization in each of the segments this year and what will be in the next 2 years.
You mean to say the EBITDA margin, average EBITDA margin for each division?
Yes, each division.
Okay. For the pigment division, we had a EBITDA margin for the whole year approximately 15%. For the agrochemical, we had a EBITDA margin of about 16%. And for the basic chemical division, we had a EBITDA margin of 43%.
What is the prevailing price for the chloralkali if you consider all the products together, like the CMS, the hydrogen peroxide, and the chloralkalis, everything? If you consider that, what will be the prevailing price now, and what will be the price after 1 or 2 years? Because the prices are going down. Now the prices has increased because of the China factor, so it is going to decrease. So how much it will go down?
I'll tell you, under chloralkali, we consider only caustic and chlorine. Rest are the chlorine derivatives, and that's a separate industry altogether. All right. And chloralkali, we believe the issue would be in the range of 35 to 40,000 this year. Okay.
Okay.
No, it's very difficult to forecast, being a cyclic industry, what is beyond a quarter actually. But this year, on an average, we can believe it will be in range of this one. As far as chloromethane is concerned, the pricing are driven by the prices of methanol. So, and a plant is going to commission somewhere in Q3. So it's very difficult to guess what will the pricing of methanol at that time, because indirectly is linked with the crude pricing, which you know how much it has fluctuated in last 1 month only.
Okay.
Right.
Okay, and what about the prices for pigments? The pigments and the agrochemicals.
See, again, I would able to give you the idea from the margin point of view. As a company, into a division point of view, we predict that for the pigment division, we should have a EBITDA margin of about 15 to 17% this year. And for the agrochemical, about 16 to 18% EBITDA margin in this year.
Okay. Thank you so much.
Thank you very much.
Thank you.
Thank you. The next question is from the line of Rohit Nagraj from Sunidhi Securities. Please go ahead.
As I understand, for the chloromethanes, we are net importer, India as a country. So is it safe to assume that in FY20 we would be able to utilize the capacity to the extent of, say, 75 to 80%?
Yes.
Yeah. And so similarly for caustic also, once the capacity is commissioned in FY21 and in the June of FY20, sorry. So once it is commissioned in FY21, given that the demand supply is favorable, is it possible for us to pull off utilization level to the tune of maybe 60-70% for the caustic division?
Yeah, definitely.
All right. Thank you, sir. Thanks a lot.
Thank you. The next question is from the line of Kiran D, an individual investor. Please go ahead. Kiran Darpareti, your line is unmuted. You may go ahead with your question, please.
Oh, I'm sorry. Yes, sir. Okay. So, congrats, sir, on the good set of numbers. So, my question is, for FY18-19, how much debt repayment the management is trying to pay, considering the projects involved for FY18-19 for CMS?
18-19, actually, if you see the plan, as per plans, our caustic soda, which is coming on stream, will be the Qtr4 19, and only CMS plant will be coming. Okay, and we expect in the next year it should be in the range of around 200 to 250 crore will be the capex spent.
No, my question is on the debt repayments.
Debt repayments, as far as our MFL is concerned, so we are net cash surplus as on 31st March. It will be debt-free by 31st December.
Okay, so all the existing debt will be repaid for 18-19, other than the new debt that you take. No. Hello, yes, sir?
Yeah.
So my question is, what is the existing debt, old debt, other than the new capex debt, which is still to be repriced from the management?
No, our debt position as on 31st March, as compared to last year, 461 crore was outstanding. Now it is 356 crore as on 31st March 18. The consolidated.
Okay, that's it. Thank you.
Thank you.
Thank you. The next question is from the line of Mehul Seth from Phillip Capital. Please go ahead.
Yes, sir. Just two questions.
Mehul Seth, there's a lot of disturbance from your line. Can you use the handset mode, please?
Hello?
Yeah.
Am I audible now?
Yes.
Yeah.
Yes, so just two questions. One related to other income part. So, sir, this quarter you have reported quite a high number in other income side. So, any reason for that?
Other income is mainly from the forex gain and loss.
So, can you quantify that part?
In this quarter, if you see, there is a 8 crore actually, other operating income, and this is total 13.8 crore.
For FY18, right?
Yeah.
And
quarter and console basis, it is 30.3 crore.
Okay, sir. And one more question related to your tax rate. This quarter you reported something like 23%. So, what will be your guidance for next couple of years?
Our tax will be in the range of 25 to 27%.
Okay, sir. Thank you, sir.
Thank you. Next question is from the line of Agastya Dave from CAO Capital. Please go ahead.
Yeah, thanks again for the opportunity. It's very difficult in this, in your company to gauge the extent of operating leverage. Because you always talk about revenue growth, and we talk directly about EBITDA margins. We don't really talk about the efficiencies. For example, in agrochemicals, I mean, from 50-odd% to 85% we are talking about in terms of your capacity utilization. So how much do you need to add to your fixed costs over the next few years in your existing plants and your existing setup? So I'm not talking about the 650 crore capex that you will be undertaking. But your existing setup, what's the rate at which the fixed cost goes up, and what is the quantum of fixed cost?
See, typically fixed costs, normally it's a manpower cost and other costs. It goes up by 10 to 12% normally.
Okay.
Yeah. So I would say in the coming year also the fixed cost will be going up by about 10 to 12%.
So this is just the general inflation, right?
Yes. Yes, you can consider that.
But not increasing, let's say, capacity as such. Like you're not adding more people, you're just paying the existing people more.
That is mainly the point. But as far as the agrochemical brand business is concerned, yes, we increased number of manpower because that is the business where you need a lot of manpower to increase your brand business, to have a strong supply chain network, and which gives you return after 2 to 3 years' time.
Okay. Okay. Acha, in your agrochemical business, if I remember correctly, I could be slightly off here. There was some custom synthesis angle also, right? Are you into that? Is there any development there?
See, that is a kind of a contract manufacturing, you mean to say?
Yes, yes. CSCS, CRAMS kind of a thing, yeah.
CRAMS kind of a thing. There are some companies which are just focusing on the CRAMS business. Yeah. We as a company, yes, we also keep our eyes open. We also keep on discussing with different companies for the contract manufacturing possibility. As of now, we are already doing one contract manufacturing for one of the multinational companies.
Yes, yes.
And because of the current China factor, now all the multinational companies and other companies are looking at the Indian market for the second supplier point of view. And I hope not only for the Meghmani, for the whole chemical industry in India, there will be a lot of opportunities coming in coming days' time. We are also getting opportunities and we are evaluating it based on the possibilities, working with them.
See, I met you guys for the first time 2 years back, and there was an angle there that custom manufacturing and custom synthesis will. I mean, there was one molecule you guys were working on. There were like some indications that something will happen in that side, but nothing really has materialized. You've done fantastically well in the remaining business. I'm just wondering if there is any pickup on that side.
Yeah, as I mentioned, we are already now one company.
Cool. Thank you very much. Thank you.
Thank you very much, Mr. Ravi.
Thank you.